All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market has about 90 minutes left in it here today, and I have a 1 hour, or excuse me, a 5 minute chart of S&P futures. The Friday afternoon rally that we saw, was right back here, and then we saw the big sell into the close, and then Sunday night the gap down. And bought up Monday and Tuesday basically, and given up here today. The magnitude of moves has been a little bit less this week, but they're still heavy. And we're still talking about a 200-point range on the S&P in a matter of 3 days. I mean, we have months and months and months without that type of a range, and it's happening in a very quick, fast manner. And it's just one that, that's what the market is right now. And we've talked about that and kind of the reality of that. There's been a lot of talk of bottom is in, and okay, this is a historic buying opportunity and all that kind of stuff, and ultimately it will be. But is it that right here, right now? No, it's not. It is one of those where we have not seen a despair phase in the market. We have not seen that phase where the dip buyers just give up and say, forget this. And we just get people saying, no, I just can't do it anymore. We haven't hit that stage. We hit the initial sell panic stage, got down, right, and have had a nice rebound. And on a historical basis, yeah, the market rallied 20% on the rebound. That sounds huge, right? But when it comes down to what it was relative to the fall, and not so much, right? Not so much there. So we're still missing that despair stage. One day doesn't create a despair stage. Oftentimes, when you look historically, the despair stage will carry on for 3, 4, 5 weeks. And I don't expect that this one will. In fact, I think this could be a very short despair stage. But, a move to, a new low on the market, followed by, a little bit of improvement in some of the corona data, and business is getting back to normal a little bit. With all the money that's in the system, that could be our historical buying opportunity. Not chasing a 20% rally, buying this week, has been. So what does this mean? What's going on? Well, let's take a look at a couple things. Let's start with the challenge. We do have a signal here today for the challenge on FedEx. And FedEx is triggering bearish here today. And it's a very nice bear signal. We saw UPS trigger bearish yesterday. Couldn't trade UPS because of the options. They were just ridiculous. And so, with FedEx, who typically, the options on FedEx are not as good as UPS. Is there going to be an opportunity here? Well, if we go take a look at the options, let me show them to you. If we go into we can't go into the weeklies. So if we go into the weeklies, we're talking about a $5 to $8 spread. They're just ridiculous. The bid is $6. The ask is $10. There's just no way to trade that for the challenge with people following along, jumping in, and all of that. It just isn't feasible, isn't realistic. And we've talked about why, plenty. I don't need to go over all that. But so that leaves us with two options. The April monthly, which are, basically 16 days, so a shorter time frame than normal. And then the May options, which are 44 days, which is within the challenge parameters. The implied volatility is high relative to what it normally is for FedEx, but it's not at 200%. So it's not at an area where you just go, oh man, there's just no way at all. But take a look at this. If we buy the 110 puts, and let's just say the stock falls $5 tomorrow, we'll make $2 on our option. We'll make $2. Yeah, that's a little hard to swallow. Down 10, we'll make 50% on our option. That's assuming no time decay. That's assuming no drop in implied volatility. Can we get a $10 move in FedEx? Well, of course we can. Right, the average true range on FedEx is 9, so we're looking for about an $18 move. So down here in the 90s. So can we get that move? We sure can. But like most options that are out there right now, not only do we have to be right, we have to be right in a big way. This isn't something where we can just be right and okay, all is good. On the on the weekly options for this week, yeah, you know what? If we buy those, we're right tomorrow. They're going to pay off big. But when it comes to buying a monthly option, there's very little margin for error, and it is one where we can see the stock fall and the option value fall as well. And it's just one of those where I have to decide, okay, do I want to get into that? Because it is outside challenge parameters. It is more than 10% the norm, and it is completely outside of challenge parameters in terms of the risk reward and all of that. Do I want to get in? Kind of, just because I want to get into something. I'm tired of being in cash, as you probably have noted from me, but I'm not going to get into it. I'm not going to get into it. I am going to wait for the better opportunities if and when they come. Not if, but when they come more. But we'll pass on FedEx. I'll take a look at it tomorrow. If we see FedEx rally a couple bucks and the options compress a little bit and the risk reward improve a bit, then I'll look to go ahead and get in there with it. So not going to make the trade here, but do have a new signal here on on FedEx. And again, if you want to make the trade, you have a different tolerance and all that, feel free to go ahead and make it. But it is just not within the challenge parameters there. So I'll continue to be patient. Now, there are a lot of downside crossovers that are happening out there. As I mentioned in a note this morning, you can see 17 on the challenge watch list. I thought Apple was going to trigger. In fact, I priced out the options for it. And they're tradable. They're not the greatest. They're a little better than FedEx. But they're tradable, but no signal there. I thought Micron had a good chance of signaling, but it didn't. A lot of these, the consolidation risk is just a little too high on them with where they sit, and I think that's very interesting because I kind of expect the market to hit a new low. So you'd say, well, consolidation risk. Well, yeah, after we hit a new low, but with the consolidation risk on these being where it is, it tells me there's a decent chance that we see some higher lows come in and some buying on the next upside crossover. So we'll see, ultimately how it plays on out. But if you're looking to be a buyer of something like a Bank of America, right? And you want to play Bank of America to the upside with challenge parameters, well, this is the type of day you need. You need a drop. Sorry about that. There we go. You need a drop in the stock. You need it to kind of firm up here, set a higher low, and then get another upside crossover here with it. And, we could see that. We could see that with a lot of different stocks. There's some decent technical arguments for some head and shoulders patterns forming up here, and it's a pattern that I'll talk about tomorrow. But I decided not to talk about it today since, anytime I talk about a pattern that's maybe in process, I always get people that want to go out and anticipate it. And, chart patterns are not meant for that. Anticipating chart patterns can get you in a lot of trouble. So we'll go out and we'll talk about it tomorrow. Some of that anticipation or some of the confirmation, better said, that is needed to possibly play it. But, overall, yeah, there's a decent argument for it, but it just hasn't evolved here just yet. One of the most interesting things about the market right now comes down to the different metrics that are out there. And we had a pretty historic rally last week, and the market vibe didn't turn bullish. And it was one of those things where I got a few questions about that. Hey, why is it not bullish? How can we have this much rally and not turn bullish? Blah blah blah. And it didn't. And it's one of those things where some of the individual metrics within the market vibe did turn bullish. In fact, the bullish percent index made a very bullish move. And a move that we can't really find happen all that much in history. And then look at today. Just absolute, clobber fest here with the bullish percent index setting a new bear signal here on it right now. So, some of the movement that we're seeing in the metrics when it comes to individual metrics is pretty historic. Can't really go back and find other times in history where we've seen this kind of action. But when we look at the metrics on aggregate, they've been pretty normal. They've counterbalanced each other in a very normal way to where we've seen the market vibe go from bearish, went up into neutral last week, spent much of the rally in neutral mode. Today it is triggering bearish. There is a fresh new bear signal on the market vibe. And I looked at it from the challenge perspective to see, okay, can I play this bearish market vibe, for the challenge with a SPY option? And, with the implied volatility just where it is, I simply just can't justify it. Yeah, could we make some money on them? Yeah, we probably could make a little bit of money on them. But it is not going to be enough to put the challenge in a significantly better spot, or enough that's going to hurt the challenge in a significantly, greater way. So I've just kind of decided to opt against that with just where the implied volatilities are and just the extreme overvalued nature of, of the options there with it. So, that's what we're seeing. That's what's going on out there. Here there's a lot of argument about, Corona and, the banks and the dividends and, people, the fundamental arguments just they make me chuckle because there's not a lot of fundamental basis to a lot of this. What do I mean by that? Well, yes, fundamentals matter, but are decisions being made about fundamentals? No, they're not, right? Nobody's going out and buying Ford because they want a 12% dividend. Nobody's going out and buying Ford because their earnings per share growth next year is going to be 100%. That's a massive number. That's a whopper. Forward PE, it's down to 5. These are great fundamentals, right? Historic buying opportunity for Ford. It's not what's driving things. Fundamentals drive things in bull markets. Fear drives things in bear markets, and it's why stocks become ultimately undervalued. And yeah, could Ford be significantly undervalued? It could, but investors are not going to start buying it up based on fundamentals until they see reports from the companies confirming the fundamentals and go, oh, okay, these fundamentals are valid. Because are these fundamentals really valid? What happens when Ford has their earnings on May 5th and they say, hey, we're slashing our dividend, we're going to suspend it. Our earnings growth is going to take a big hit. What's going to happen? Their PE is going to inflate. Their earnings growth is going to look terrible and could go to contraction. And now they'll have no dividend. And you're left there going, well, what fundamentals, right? The fundamentals are terrible now. And we could actually see that be bought up, because it does create a little certainty. So, to look at stocks and to say, hey, you know what, let's argue the fundamentals here, blah, 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 it doesn't make any sense. It never has in big, bad bear markets, and nor will it ever in big, bad bear markets, because it is about fear. Can you bottom pick? You sure can. Can the fundamentals shift your way? They sure can. Are there things that I look and I go, okay, their fundamentals are not going to get hit nearly as hard as other stocks? Yeah. I'm on record. Amazon, Netflix, Bank of America, Walmart, all stocks that I like, to go higher when this is all done. Even Boeing. I think is he has a really good shot of a very strong move higher when this is all said and done. But they're not being driven by fundamentals right now, and so even breaking down the fundamentals simply doesn't matter. And it will matter when the market vibe turns bullish, when we start to see earnings from some of these companies, and we're going to be heading into earnings season, and the earnings are going to be terrible. This is going to be one of the worst earnings seasons that I have ever seen as a trader. I've been around a while. I've seen a lot of markets, financial crisis, all of that. I watched. I didn't trade aggressively, but watched a lot of the .com bust and everything else. And this may be one of the worst earnings seasons that I have ever seen. Is that going to drive stocks lower? Not necessarily. In fact, it could be a big catalyst to drive things higher. But ultimately, we're seeing the projections coming on down for a lot of these. And once we get a little certainty, once we hear from the companies about what's going on, we could see a lot of bad news buying come into play. So I just would not be surprised to see some more selling into earnings season. Bank of America is going to be one of the early earners. In fact, if I come up here to the calendar, we can start to see when they're coming in. Let's see here. Yeah, middle of April, middle of this month is when we'll start to, get Bank of America, Citigroup, United Healthcare, start to come in. So I would not be surprised to see some more sell into the front of earnings season as estimates get dropped, and then see earnings season be a massive catalyst for overall market upside. And, if that does correspond to maybe a little topping in the coronavirus case numbers, that would only help it. But so far, who knows? Who knows how they're going to play on out. We continue to see them, increasing at an accelerated rate. And obviously, there are some very smart people across the globe that have very differing opinions about how this is all going to play out. So, I don't sit and buy one of those. But if we do see it all topping, and we see a sell-off ahead of earnings season, and earnings season start to come in, we could be looking at a very interesting setup, one very similar to March and April of 2009, which was pretty historic and was pretty fun to be a part of. And we'll see how it plays out. But I do think there's a pretty good chance that we will ultimately see it play out in that way. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.